Welcome to this presentation by Facilitators Research. This research is distributed exclusively for informational and educational purposes and does not constitute financial, legal, tax, or investment advice. For such services, you may reach out to speak to one of our officers.
Asset management and custody banks is a strategically vital subsegment of African financial services. Asset managers pool capital from retail and institutional investors and invest it in securities, real estate, and other assets on their behalf. Custody banks safeguard those assets, settle trades, and provide ancillary services such as fund accounting and performance measurement. This presentation examines the African asset management and custody landscape, focusing on the multi-billion-dollar institutions that anchor it and the structural forces that will determine its trajectory over the coming decade. Total assets under management across African asset managers exceed $450 billion United States dollars, with South Africa alone accounting for approximately $250 billion. More than 1,200 registered funds, including unit trusts and exchange-traded funds, operate across the continent. The weighted average 5-year compound annual growth rate in assets under management has been approximately 17%, driven by pension reform, retail investor adoption, and strong capital market performance. This growth rate is among the highest of any financial subsegment globally. The leading African asset managers are dominated by South African institutions. Allan Gray, a privately owned manager founded in 1973, leads with approximately $130 billion United States dollars in assets under management. 91, formerly Investec Asset Management, and now separately listed in London and Johannesburg, manages approximately $150 billion. Sanlam Investment Management, Old Mutual Investment Group, Stanlib and Coronation Fund Managers round out the South African top tier, each managing between $45 and $65 billion. ARM Holdings and Stanbic IBTC Asset Management anchor the Nigerian market with $2.5 and $3.5 billion respectively. Together, South African managers account for more than 90% of total African AUM. South Africa hosts the largest and most sophisticated asset management industry on the continent. The industry benefits from a deep pension fund system with more than 1.5 trillion rand in retirement assets, a sophisticated regulatory framework under the Financial Sector Conduct Authority, and a long history of institutional investment performance. Allan Gray, Coronation, and 91 have built global reputations for emerging market and African equity investing, attracting institutional capital from Europe, North America, and Asia. The South African asset management industry is increasingly exporting its expertise, with managers launching Africa-focused funds for global distribution. Pension reforms are unlocking structural growth in Nigeria, Kenya, and Egypt. Nigeria's contributory pension scheme, established in 2004, has accumulated more than 18 trillion naira in pension assets under management, with the Pension Fund Operators Association of Nigeria reporting annual growth above 15%. Kenya's Retirement Benefits Authority oversees a pension system that has grown to approximately 1.5 trillion Kenyan shillings. Egypt's pension reform program, ongoing since 2019, is creating a structured funded pension system that will channel significant flows into local asset managers. Each of these markets is expected to deliver double-digit AUM growth over the next decade, creating significant opportunities for incumbent managers and new entrants alike. Custody banks are the hidden infrastructure on which asset management operates. Standard Bank Custody is the largest custodian in South Africa by assets under custody, serving institutional investors, pension funds, and foreign investors. FirstRand Custody is a major custodian with strengths in retail fund custody and corporate action processing. ABSA Custody holds a strong third position with particular focus on Pan-African custody services. Stanbic IBTC Custody, anchored by Standard Bank's African Custody Network, is the leading custodian in Nigeria. KCB Custody is a leading custodian in East Africa, with strengths in Kenyan and regional custody services. Custody is a scale business with high operating leverage, and consolidation is expected over the coming decade. Active management dominates African asset management, with more than 85% of assets under management in active strategies. The persistence of active management reflects market inefficiency, limited analyst coverage of small and mid-cap stocks, and the importance of stock selection in volatile markets. Coronation, Allen Gray, and 91 have built their franchises on active management outperformance. Passive management, particularly exchange-traded funds, is growing rapidly from a low base. The JSE lists approximately 80 ETFs with combined assets exceeding 120 billion rand. Satrix, owned by Sanlam, is the dominant ETF provider in South Africa. Nigerian and Kenyan ETF markets are at earlier stages of development, but are growing rapidly as retail investor interest expands. African managed fund assets are allocated approximately 45% to listed equities, split between African and global markets. Fixed income, primarily government bonds, accounts for approximately 35%. Cash and money market instruments account for approximately 12%, with the remaining 8% in listed property, alternative investments, and offshore assets. This allocation reflects both regulatory constraints, particularly Regulation 28 in South Africa, which caps offshore allocation, and the relative underdevelopment of corporate bond and alternative asset markets. As these markets develop, expect allocation to gradually shift away from government bonds toward corporate debt, property, and alternatives. 5 strategic imperatives apply to asset managers and custody banks. First, build Pan-African distribution. Managers that build distribution across multiple African markets will capture disproportionate flows from Pan-African institutional investors. Second, develop ESG product sets. Environmental, social, and governance funds are attracting global institutional capital, and managers with credible ESG frameworks will benefit. Third, invest in digital distribution. Direct-to-consumer digital distribution platforms will redefine retail asset management, with first movers capturing structural advantage. Fourth, pursue custody consolidation. Custody is a scale business, and consolidation will continue, with regional scale custodians delivering superior returns. Fifth, develop alternatives capability. Private equity, infrastructure, and private debt capabilities are increasingly demanded by institutional investors and offer higher fee margins. In summary, African assets under management will exceed $1 trillion by 2030, driven by pension reforms and retail investor adoption. Pan-African distribution capability will be the primary competitive differentiator over the next decade. Environmental, social, and governance product sets will attract global institutional capital and redefine product menus. And custody consolidation will accelerate, with 3 or 4 regional scale custodians emerging as dominant players. The asset management and custody banks subsegment offers some of the most attractive structural growth characteristics in African financial services. Thank you for watching this examination of asset management and custody banks.